Okay.
in your presentation. So I know you mentioned about SMEs having significant challenges in terms of accessing funds, um, and you mentioned like a percentage of about 72% of businesses having that access challenge. You spoke about collateral being a big part of that, but apart from collateral, what are some of the key challenges that is really impeding their ability to access funds?
Can I just make a comment there before Mas
Yeah,
comes in?
yeah,
Because
go ahead.
I think the collateral is a point, but I think fundamentally the issue is SMEs. It's not so much about access. I don't think it's not the physical access for anything. I mean, most of these SMEs can have access, but I think there are two. One is what Mas mentioned is the collateral issues, but also they're just being crowded out. The efficiency problem in banking sector is quite high. Is the spread between the lending and the bond is quite high. It's like 10, 11%. When you start lending to people, I mean, central banks' treasury rates is now single digits. It's probably going up, but it's about single digits. But banks are still averaging 20, 25% lending. And that kills any business.
Right.
And so I think it's a strong. I think when you talk about the SMEs lack of access, it's not so much. It's not like not having access to a banking network. It's actually a structural issue with the rates, the lending rates. They are crowded out. Government is because government is borrowing to fund its fiscal deficit,
Right.
and they're significantly borrowing locally. Banks are very comfortable to lend to them. And so
Absolutely.
long as you have that structural issue in place, I know you will continue to have this. I know central bank tried by pushing the rates down, which is artificial because even now their MPC rate is about 17, 18%, and their treasury yields are still about 4, 5%. It's unrealistic. But anyway, that is what it is. But the reason I think they're trying to do that to just really force the bank, but it's not pushing them. They have so much
Right.
liquidity on hand. They can really continue putting, I mean, banks have about $1 billion of deposits, and they're lending about $100 million, including the microfinance, and that's small.
Right.
So that structural issue need to be resolved. Otherwise, no hope. Banks will, I mean, SMEs will continue borrowing from the other informal sources. Anyway, I just thought I'll add that before Mas comes in.
Good point.
Good. I think, yeah, you're absolutely on point. The cost of borrowing you alluded to is quite high. And yes, in the MPC rate is currently at 17, and banks have a spread of about 5%. So that takes for most SMEs that's where they fall under. Maybe it's only the blue chip corporate entities that can have it maybe a bit cheaper, but generally most SMEs will find themselves borrowing in excess of 21, 20. That cost of borrowing is quite a deterrent. So that is it. Maybe goes to show why generally SMEs, in fact, would tend to rely more on internal sources of financing rather than going to a bank if they have the capability, because untenable
Yeah,
in terms of the rates. So that is, in fact, you're on point there. It's quite a deterrent. I think
yeah,
another one that I maybe want to touch on is also in terms of which boils down to the structure. Also, is in terms of having financial information. This is also a gap currently. Generally, SMEs don't tend to keep audited financial accounts. And this is one of the criteria that generally many banks are able to gauge their financial ability to pay
yeah,
their facilities. We know NPL generally tend to be, even though in the banking industry at the moment is in the single digit,
yeah.
central bank, the NPL ratio is within the single. So you could say is on the low side. But generally, SMEs also tend to constitute a greater chunk of that NPL ratio. And because of that, there is financial statements or financial accounts from most of these SMEs when they come to the banks. And we know there are capacity issues there, but also we know there are other factors beyond just the capacity. Some willingness to, in fact, have those financial sometimes it's a challenge because of, we all know, this tax regime could be a factor, and other forms of constraint that may warrant them not to want to share their financial information. So yeah, I think
Yeah, but let me just
obstacle. Yes, please go ahead.
I just want to add a point. I think banks are still, they're still in their old ways of doing things. You talked about some of these fintechs. If you look at companies like Amazon, or even PayPal, or or the Mercado Libres and stuff like that, they are not necessarily looking at audited financial statements. They're looking at the relationship with their customers over time. And by looking at that relationship, you can actually adduce a lot of data from it, because they see the transactions that are coming through. They see the volumes that are coming through. They see the goods that are coming, because they are privy to those things. And banks actually, when you have a relationship with some of these people, you also are privy to some of this information. I know banks sometimes use this, but it is also something that can be, and I think this is where the fintech, if it takes hold here, can actually be a good driver to this. The problem with fintech in this country still is the friction. I mean, you can imagine, even if you want to load, say, an AfriCell account or a QCell, Q Money account, and it's a struggle. Even just depositing money there is a struggle. So I think those frictions, until we kind of resolve those frictions, but if it takes off, they will have so much activity. Like QCell, if you look at the number of calls that they will go through, I mean, imagine if that was transactional data. It will be so rich that they can use it as a basis of lending. And that is why fintechs in a lot of markets have taken off, because they have that rich data outside of the financial statement. And I think in this country, if we are to increase the lending, we have to change some of those structural issues and not just say focus on financial. We can have other means of assessing credit without audited financial data.
Right.
But I think as the formalization improves, I think some of these things will fall in place. But until then, we must look at other forms and to try to encourage lending. Sorry, Matt, I'm coming into your thing. I just thought I would add.
Yes, I quite agree. So that is where the competition would also, if we have, like you said, other players in the markets, in that space, in that lending space, I think generally it would also trigger the traditional banks to also come up with some innovative. But absolutely, I agree with you.
Thank you so much, gentlemen. I always say Gambia's biggest resource. We don't have any natural resources, but it's really our people. Um, the amount of intellectual capacity the country has. Honestly, I just hope that one day it's all tapped and harnessed for the country to move forward. But very interesting.
Bakari, there's a question here who is asking about, don't you think that there is a need to support the housing department to provide housing for our Gambia?
Well, that's yours, Mr. Manya. Go ahead.
He's asking whether particular about SSHFC. It's funny. Housing is actually a misfit in social security. I understand the reason, because it was coming from the basis that social security has got funding, long-term funding, and they can provide. But actually, they have. I mean, if you look at, say, I won't count Kanifi, but if you look at, say, Brusubi, Tujere, and I know they were also Jaban, and I know they were also trying to build. I mean, literally, the housing fund was financed to put that infrastructure in place at almost zero cost. So that is why Social Security, that is why they were able to give out those houses at the pricing they did. But you know, the biggest problem with Gambia is if you look at average salaries in this country, you'll be surprised that more than 60% of this country probably earns less than 10,000.
Yeah.
If you give them even $100,000 in loan, and that will probably only get you a land, even over a 25-year period, even at a preferential interest rate of 5% or so, they will struggle to cover it on a month-to-month basis. So I think to go to affordable housing, my view is we need to move away from this concept of I need to have a compound. You know, to go, you know, if you think about it, most of us here know for a fact that people have been living in 2-bedroom kind of apartments with their family and have a small backyard on the front end. And they have been comfortable with that with their families in there. And they've been renting it. Now, I think we need to move people to say at the initial stage of getting affordable housing, getting a property you call your own, we need to get to a basis of a concept similar to that. And having 2-bedroom houses, you know, is not fancy, it's 2-bedroom, it's to provide basic roof over the head.
Right.
This is what the majority of the Gambians can afford. You will move away from rental because the rental costs will actually be sufficient to cover the loan repayments of those kind of houses. And as your situation improves or expands, you can build whatever you want, but at least you would have a basic accommodation you call your house. Even in retirement, there wouldn't really be rental payment. And I think that alone will take a lot of stress and poverty off people. So I think strategically, when we talk affordable housing, that is really how we need to address it, as opposed to and move away from this mentality. I need to have a 20 by 20 house and have a self-contained house in it. No, I think, yeah, I mean, that is an aspiration, but I think we should start having the basic first.
Absolutely. Excellent. So there are a couple of questions in the on the comments. I'll go over those. Mas, one of them is a question to you. Salu asks, are fintechs well connected to banks? And if so, do their connections with banks bring customers more security or less security? That's one. And two, he was also saying, are all these third-party relationships overseen by the central bank, or do there exist other prudential regulators that partake in the regulatory affairs of such a relationship? So it's a pregnant question, but maybe you can start with the first one, as to whether these relationships can provide more security or less to customers.
Okay. Thank you for that, Salu. So I think that would depend to a large extent on the type of partnership, okay, that exists between the bank in this case and the fintech. So banks tend to buy into some of these fintechs. Maybe they could start on a partnership level, and down the line they buy over the solutions that the fintech companies provide, and then integrate it into their own system. However, in some respect, they have integrations of the system between the two platforms. That is between the fintech platform and the bank does integrate, and in that way, then there is that integration of the two exist, at least for the foreseeable future. So in the first instance where banks buy over, then of course that software or that platform is then owned by the bank, then it becomes part of the infrastructure or the technological infrastructure of the bank. The security that goes with having a banking platform or banking entity would of course cover that. So I would say that would be highly secured based on the security level at the bank. Of course, when it's an integration, then that's where there could be potential risk, in the sense that risk coming from the fintech side, infusing into the banking system. So banks are generally aware of this, and of course, they tend to put in structures or avenues that will protect the systems. So generally, we know fintechs generally, many fintech companies are well, and they are quite innovative in the way they go about it. But I would, like I said earlier on, also their key strength of that agility and innovation also could also be a drawback in some instances in terms of having their systems watertight when it comes to the risks posed by cyber criminals, for instance. So I think generally of security could be availed there to the customers, but I think it's generally secure. I would say it's generally the banks and the fintech companies generally tend to give a lot of credence to having the systems well that may be posed by some of those cyber criminals that could want to penetrate. So generally, these are the two angles that I wanted to touch on. So in terms of the supervision, generally, yes, these are supervised central bank, because fintech companies and banks all tend to both of them tend to be are currently being supervised by the Central Bank of the Gambia. So generally, yes, these are under the supervision of the central bank, and when they do their on-site or off-site inspection, and even at the point of having ordinarily seek their approval, and that will be subject to various forms of scrutiny before it is approved. So yes, it is at the moment being supervised by the Central Bank of the Gambia.
So thank you, Mas. So a follow-up question to that, since this is a new phenomenon that's coming into the Gambia,
Okay.
does the central bank have regulations to kind of regulate? I mean, I understand um, them being in the picture and understanding the partnerships, but as banks enter into these relationships, are there regulations that have been codified or modified to kind of guide this relationship going forward?
That aspect is what I came to when I mentioned about the need or the support that the government could play, or the role that the government also has in terms of enabling environment. So I think Gambia, that is the fintech industry, it is something very, very new. And the focus for now seems to be on the mobile money angle of it. In terms of financial services, that's where we're seeing a lot of inroads to in terms of our mobile money services. But generally, we know fintech is quite broad and quite diverse, and there are a whole lot of other areas. So in the regulations, in terms of accommodating all these areas, is not yet in place, I would say.
But also,
So yes,
I just want to
Mr.
add,
Manja, you can go ahead.
I don't think you can expect central bank to regulate relationships between two parties. That is really not what they will do. They have some regulations around fintechs, and they have a whole unit specializing on fintechs. And it is evolving. It is still new in this country, but there is a lot of regulation that they are planning. But also, that aside, there is no bank that will onboard a fintech without interrogating seriously their API relationships. Because every single integration that has happened so far, they would actually take a lot of their time to look at your system, your security, and how those APIs integrate. So yeah, I mean, risk is always present, but I think banks are being very careful to onboard any fintech partnership they want to establish.
Amazing. Thank you so much, Mr. Manya. So the other question I'll ask you that, Mr. Manya. Alaji Toure is asking, how does the Gambia's financial sector compare to neighboring countries or similar economies in the region? And what are the lessons that can be learned from these comparisons?
So that is quite a broad. Oh, okay, I think it's okay. Mohammed, you can go ahead.
No. You are the banker. You go ahead.
Specific, maybe call us, refer to us by first names.
It doesn't matter. I think, frankly, I mean, Musk can very ably and respond to this thing. I've got some basic ideas, but so it doesn't really matter. You go ahead.
So I will just mention maybe a couple of things, but at least wider experience having worked in the many countries beyond Gambia. So for now, my experience seems to be, of course, I work in a group that is also in I have some understanding based on that. But I think the question is though a bit broad, because when you say comparison between Gambia financial services and other neighboring countries, to make a straightforward comparison to say this is it and that is that, because of course we know financial services industry is quite broad. But I know generally, for example, still staying within the topic that I earlier on spoke up on, which is in terms of access to finance. Okay, so I did look at, for example, how other of their access to finance for SMEs. And generally, we see that Gambia's credit to the SME financing is quite low compared to the average in sub-Saharan Africa. Okay, I think generally we said it's about 7% in the Gambia, but in some of these other countries, you have the average about 24%. Okay, so generally we see that other economies, in terms of financial intermediation and access to SME financing, they tend to be doing better than us, based on the data that is there. But also of the banking system to the public sector, which is the government. Here, Gambia is actually ranked as the fifth among this about 38 countries that were surveyed in sub-Saharan Africa in terms of the significance of their exposure to the government compared to some of the other countries in this region. So Gambia also generally tend to be highly exposed or higher exposed to the government more than what is available in some of these other sub-Saharan countries, based on that the research that was done. So at least based on these two indicators, we see that we are not doing quite well in terms of giving financing or financing to access to, but also in terms of financial intermediation by way of lending to the private sector as against to the government. But beyond that, we know also for a certain, in terms of the depth of the financial industry is quite shallow. It's the basics that we are still doing in the Gambia. Like, we don't have a secondary market. I know Mohammed has mentioned that the capital market is at an advanced stage in terms of having one in the country. But we know most of these other countries in the sub-region, they do have that provide secondary market, for example, to banks, in fact, to be able to trade some of their securities amongst themselves, and even available to other people to be able to invest in those secondary markets. Generally, what we have here is primary markets, and because of that, in the financial sector, we still have some way to go in terms of products, in terms of access, and in terms of even some of the financial instruments that are all geared towards increasing financial intermediation for the country. So I would say we have, in terms of number of banks, it's quite significant. If you look at our population size, to have 12 banks, it's quite a high. Is level of financial intimidation and access. What are these banks doing in terms of supporting the various sectors of? I think that is the key thing, and that we still have a long way to go.
Thank you, Mas. So
you.
we have about 7 minutes to power through the remaining questions before I cede the floor to Ibrahim to do the closing remarks. So I'll go quickly through the remaining questions. Aisha Sabanjang, Mohammed is asking whether someone can access their social security money to fund a business or make some sort of investment. And I think your answer to this was no, but I'll let you give more details.
Yeah, no. Unfortunately, no. It's not.
Yep.
It's not an option.
Perfect. So another question again. This is about pension. So it looks like pension is the hot topic for everyone here. Salu asks, do people's portfolios with social security have enough diversity? If not, what options would you recommend, and what are the ways to have the possibilities made happen?
Yeah, I mean, we've been talking about, even the financial sector. There is no depth in the market,
Right.
and because there is no depth in the market, there's very limited investment opportunities. So you find the majority or a significant portion of Social Security funds is in debt securities, either with the government or in deposits with banks. And that's really, and those are all short-term type of investments. So they're really not the best places to put your funds. Apart from that, they've got some investments in some companies, trust banks and Standard Chartered and GPs, but there are limited avenues. I think what the Social Security should do is they have got within the Act the possibility to invest up to 25% of their funds offshore. But to do an offshore investment, you really need to have an understanding of those kind of markets, or you engage a fund manager to do it on your behalf. So I think those are some of the options. But certainly, because if you can at least invest 25% of your funds offshore, it provides you with an added advantage, because there is protection against currency volatility, which is our case. Like I've said, I mean, if you look at the impact, Social Security in 2000 was the second biggest player in the financial sector apart from central bank. It is now nowhere around that. It now has a balance sheet footing of about $7 billion. And this is a fund that is contributing. The annual contribution to this fund currently stands at somewhere around $600 million. So they should be in a significantly better position than they are. But they have to really look outside here and to really broaden the investment horizon, but also give them protection against a continuous devaluation of the currency. Internally, there's always opportunities internally, because they can actually, surprisingly, Social Security can directly lend, like I said, to the productive sector.
So, Mr. follow-up question to that. If given the way Social Security is and how we are predicting somehow a very difficult future, should we even start the debate about whether it's a viable venture that we should continue, or it's something that we should? I know that debate is going on here between the Democrats and the Republicans as to whether they should scrap Social Security entirely. What's your take on that?
Well, there are two components to Social Security. Well, there are three actually. A provident fund is, like I said, defined contribution. That risk is on the individuals. I think there needs to be, the governance structure needs to be improved. I mean, this country, unlike many countries, do not have, for example, a pensions regulator. So there's really, you have a structure, you have Parliament, which has this PC, or you have the Ministry of Finance. Now you have the new commission that looks at performance of social. But anywhere else, you need to have an authority like central bank does with banks. So should a regulator do with a pension fund. Look at things, for example, like how and where you are investing funds. What are the risks associated with those funds? What are the returns on those funds? What is the long-term viability of those funds? Whether you are solvent, liquidity, and all of those things. You really need to have an authority who really understands this thing to look after it, to make it viable. As an institution, it is vitally important to have some kind of a pension structure. Otherwise, the obligation on state as far as social support, social security, will be significant. And if it's not properly managed, it actually leads in many countries to social upheavals down the line. So I think there's a structural weakness. There's definitely a need to address that. And hopefully once that is addressed, because there are avenues they can invest offshore. It's not like they can invest offshore. So possibilities exist, but I think we need to strengthen governance. We need to put structures in place who will have authority, like central bank. Like I said, central bank does with banks, because you are a custodian of people's funds. If you're a custodian of people's funds, somebody else should be making sure that you are carrying out those fiduciary duties effectively and efficiently.
Mhm. Excellent. Well, ladies and gentlemen, I would love to have gone through all your questions, but some of the questions I can see, I know the panelists have already addressed them in their presentations or in our follow-up discussion. So probably just go back and watch the video or the points that you have missed. At this point, I'm gonna give each of the panelists 30 minutes to 30 seconds to 1 minute to do their closing remarks before I pass it off to Ibrahima to do the closing. Mas, you want to go first? 30 seconds. Any closing remarks?
Okay, I thank you very much. I think I want to particularly thank the Gambia Center for Research for giving myself this opportunity to come on this platform and learn a lot. I think I've learned a lot from this interaction, and also share my small idea or understanding of the topics that are at hand. And I are good, and they are still continue. I think a lot of good information, valuable information has been shared through the interactions that we have had. And I believe this should give us the opportunity to build on some of these things and be able to influence policymakers to shape our financial sector to be able to do what it ought to do. That is to provide financial intermediation, provide access to finance to many of our business communities or business sectors who are really suffering, as we have discussed, who are really not included in the financial systems. And a lot of them, as the rates that they pay on some of those facilities are quite exorbitant generally, and we need to look at how do we make that more accessible, more affordable for them to be able to use or leverage on to be able to drive. Forget these small scale enterprises do contribute a lot in our economy by way of employment, by way of economic growth, the services that they provide to the various sectors of the economy. So I think the focus them. And that, of course, is multi-sectoral and involves
Thank,
a lot of stakeholders. So on
thank
that
you,
note, I want to
Mas.
thank you very, very much. Yeah.
Thank you. Mr. Manjan, closing remarks.
Yeah, well, I'll make it very brief. First, really just to appreciate the Center for Research. I think this is wonderful. I think it is necessary. And all I will close with is, our destinies are always in our own hands. So we spoke about a number of things. And I think if we can and harness what we are putting aside, that in itself will make a big difference. It will provide equity. It will enable growth. I mean, these are really some of the things you require for growth. But I think we need to take ownership. We need to make sure we have a better understanding. I think it is reflective not just of this topic, but generally, I think as Gambians, we are not as productive as we should be with our affairs, whether it is, I think what we've said about social security is evident in many other aspects of our life. So I think if I am to close here, that is probably the only statement I would leave the team is, let's take ownership of our affairs. Ultimately, it is only us who will drive where we want to get. So that will be it.
Thank you so much. Great words of wisdom. Thank you so much, gentlemen. Mas Manjang, Mr. Mohammed Manjang. It's a pleasure to share this platform with you. I've learned so much from both of you. And I hope we'll have many more opportunities like this to share platforms like this and kind of share our own contribution in national development. At this point, I'll pass it off to Ibrahim Sawane to make the closing remarks. Thank you, everyone, for your attention. Bye.
Thank you very much, Bakari, for the wonderful moderation of today's webinar. And first of all, we would like to apologize that Mr. Philip and Honorable Dominic could not join due to some technical reasons. But I think you will agree with me that the two speakers, luckily or coincidentally from Manjankunda, did justice to the topic today. They did very well. It's just coincident, but I think it was great. And for me, so anytime I attend a webinar or an educational forum, I always put my action items under 4 groups. That is there something I am doing that I should do more of? Is there something I am doing I should do less of? Is there something I'm not doing I have to start? Or is there something I'm doing I have to stop doing? And when you looked at these two gentlemen's discussions, they talk about a lot that's moved around personal finance, moved around the fintech opportunities. And for us, as the viewers or the audience, we have opportunities to look at personal finance. It is very personal. Personal finance is very personal. Both Mr. Manjans together did discuss these things in detail. And I will encourage, if you are just joining this discussion, you go to the website of the Institute or the YouTube of the Institute and listen to these conversations again once more time. Because Mr. Manjan talked about a lot that maybe our retirements are at risk. And Mark spoke about the opportunities in fintechs, which some of us could develop them into the business. But I don't have to repeat everything here. What I'm trying to encourage you is to listen to these conversations once more and think about what is that one thing you can do from these conversations. And of course, we cannot end this webinar without thanking the Institute that organizes, the team behind it. There are a group of people behind that are supporting the live event as well as before it came into place, from Binta, Salu, and the others, and all the team or the management team of the Gambia Center for Research and Policy Studies. So once again, thank you very much. I would like to end this webinar here today, and I encourage you once again to go and listen to these conversations. Thank you.
Okay, thank you.
Thank you very much.